Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Thursday, December 20th, 2007. Well, here we are. You guys know this is what we've been expecting. This is what we've talked about in the videos. And when I say this, I mean a rally. Not a huge rally. I'm not expecting us to go back to new highs, but you got to have a push up into the holidays. What I love about this was that they held off so long that people began to question. Maybe we won't get it. Maybe we won't get it. Whenever that happens, it's right around the corner. And this is all psychology 101. You know, I mean, the psychology of the market is just so key to understand it that it's so worthwhile I can't even express. So let's go right into the charts. But just to give you guys an idea here, we had the markets closing up across the board. The S&P up 7, the Dow up 38, and the NASDAQ up almost 40 points today. A great rally today. And if I do dare say anything, I think we maybe have a little more upside, at least at the open tomorrow, and I'll explain why in a minute. It's about 4:20 in the afternoon here on the East Coast in New York as I speak to you all, and great rally. Let's go right into it here. Here's the chart of the ES Futures intraday, and there's some key things I'm going to show you on the daily, but I also want to touch on the intraday first. Let's get out my trend tool, which I always like to use, so you guys can all see what's going on. Overall, a somewhat whippy day, although it looks a lot more whippy than it really was. This dip right here was the only real dip, and we just kind of came right back from that here. Look at this little pattern here. I love this pattern. You get the dip, the rally, and the small pullback right into all three moving averages. Whenever you get a pullback in there, there's a good chance that you're going to get at least a bounce. Whether or not it goes this high into the close, who knows? But, in any case, look at this little push up here. And I just want to point something out here is that the market actually closed right around here, but these next two candles are a pure result of a stock reporting earnings, which we've been talking about and speculating that it would probably be pretty good based on that everyone was trying to, or a lot of amateurs out there were probably trying to think that it was going to be negative. And you got to favor that. You got options X, and this is all stuff I've repeated in multiple videos, and this is why we were dead on with this push up here in this market in this last week before Christmas, and then we'll see if it continues. But you got options X tomorrow. You had Goldman Sachs earnings this week. You had Fed speak every day. You had Research in Motion's earnings today, which I'm going to go over very shortly as they are out now. And all this combined, considering the psychology of the markets was on the short side, a lot of puts out there. You need those puts to expire worthless, meaning you need to move up into options X. And this is just repeat stuff because every month we go over this, and this is how it works out. So again, not to toot my own horn here or InTheMoneyStocks.com's horn, as I don't like to do that too much, but this is what we were expecting. We got it today, and it looks like we'll get some follow-through tomorrow. Now let's go right into some charts here, and I just want to point out the NASDAQ here. This is the intraday NASDAQ, same type of thing. You had the gap up, pull back, then a rally, little V right here, and the V formation right here, right push up. Now let's go right into the daily because this is what the beauty of it is, all right? Now remember yesterday was key. Well, we had this big move down over the last few days, okay? And then the key here was that we had this move up. We did not confirm this move down, all right? This was Monday's move down. On Tuesday, we did not confirm that move down because we gapped up and we closed up here, all right? Now Wednesday, we had a push up. And what was interesting about Tuesday is we said, okay, guys, we didn't confirm the move down, but we did not close above the 200 moving average at 2,600. And we said this level is key. 2,600 is key. If it can get above that, maybe we have a small chance at another push up. Well, yesterday, what did the market close at? 2601 on the NASDAQ. You know, you scratch your beard here and say, okay, this is interesting. And, well, we closed above 2,600. That's above the 200 on a technical level. Now, granted, it's basically right on the line because you're talking about a point when you're dealing with a 2,000 number index or 2,600 index. So a point here and there is really, you ask, well, what is that? Well, psychologically, that could be significant. And you guys know psychology rules the markets. So what happens today? We get a nice move up here, a beautiful move up, and the markets actually get above that 200 as of the close yesterday, continue that move up. We actually retested the 200 today here on the downside at that little pullback that I talked about, and we closed right on the 20 moving average now. So you see how key these moving averages are. Look at everything as pertains to these moving averages here. All right, you had a close right below, then you had a close above, then you had a retest and a move up off the 200 right to the 20 moving average. The Nasdaq closing up 40 points. Now, again, we positioned ourselves beautifully, expecting this. Now, the question becomes, well, what's next? Does this continue? And the answer, to at least for the movement up tomorrow, and you got to assume this, unless there's some major negative news out in dealing with financials, that you got to expect that we have a continuation, at least on the Nasdaq, because of research in motion. Research in motion, here's the level 2. You can see prints going off faster than you can even blink here. And research in motion closed at 106.99, up $4.86 on the day. And right now it's printing 117.13 by 117.26. The prints here 113, 117.13, 117s. So you're seeing over about a 10-point move higher after hours on a $100 stock. That's almost 10% here, as they blew away the street on many levels with earnings. And obviously, we kept on talking about that level of 100 being so key and how they kept on saving research in motion from going below 100. Research in motion would be below 100, then they wouldn't confirm the move. Research in motion would trade below 100, and somehow in the last 15 minutes, they'd save it, and this is big money I'm talking about, and it would close above 100. Never confirm that move down. And let's look at the chart here on the daily. Multiple times, look at this. You could draw a level right over here. I mean, this is how much better than this a bottom can you get? All right, here's the one day it closed below, but look, the next day it didn't confirm that move below, and we moved right up here, right into that 20. We pulled back, retested that same level. We moved up again into that 20. Well, guess where it's going tomorrow? Up here. So in any case, my point being that is that obviously research in motion will have a positive effect on the market tomorrow, which is going to continue our idea of a multiple day rally in this market to bring it back up into the point where people aren't so bearish. Psychology and sentiment has to readjust now. And as options X expire tomorrow, maybe we get a little gap up. Tomorrow we could gap up and we could actually come off those highs. I don't know if we'll go negative, but we could very easily come off the highs on the gap up, as we will gap up monstrously tomorrow on the Nasdaq, I would guess. All right. So anyways, interesting there. Now a few other things in the chat room. We had some nice plays today. There were 2 or 3 plays in the chat room that were nice today. I'm not going to go over a bunch of them. One I do want to point out is OSTK. Those of you that sign up on the website for the free, we send out a free watch list every once in a while. I think every couple weeks or so we send out 3 or 4 stocks on our watch list. This was a stock we sent out on Sunday night to watch, as it was making a nice little bottom here. All right, look at this nice little bottom formation. Well oversold. Look at this stock. Overstock.com, 30% short. You guys know I love those short ratios because it causes a short squeeze. It's forced buying, or it's buying on any major move up, extra buying. So you had a stock here trading up around $39, came down to $15, actually broke $15 down here today. Look at this move up. It doesn't look big on the chart, but that's $1.30. Look at this move here. $1.30 move up on a $15 stock. Look at this nice little channel it was in all day, and continuing move up. This was sent out. This was mentioned multiple times in the chat room. Phenomenal play for a bounce, and $1.30 on a $15 stock in one day. You just can't go wrong. The stock closed at $16.27, up $1.30. So anyways, long story short, that's a great one that was mentioned and sent out for the free subscribers, and we obviously don't send those out too often, and we don't tell our exact entry prices should we have them, because it's not fair to our paying subscribers. But, you know, give or take, we send it out, and then we're looking at it for a possible entry. You have to assume we got the entry right in this area down here, and so be it there for a nice positive gain. Now, a couple odds and ends here, folks. What's going on in this market? Well, things were too bearish. I mentioned that. You have options expiration, too many puts. The market had to rally. Light volume starting now. Light volume, very light volume today, even though we had a nice rally. And the reason being is that you have the holidays coming up, and traders are already starting to take off. Tomorrow afternoon is going to be dead. Monday's a half day. Market closes at 1. Volume dead. Tuesday we're closed. And then the next week is the week between Christmas and New Year's, and it's going to be dead volume. So whenever, you guys know by now watching these videos, light volume means that the market has a general bias to the upside for the most part. Now, it doesn't always mean we go up, but you gotta favor it slightly, whether it's 55 to 45% to the favor to the upside or so on. You have to kind of favor that. So in any case, that's what we're favoring. And although if we have a couple more days like this, I am actually going to think more likely of a sideways market next week because we've gone up so quickly in a couple days. All right, so we'll kind of update you guys. I'll do a video tomorrow, obviously, into the weekend. We'll probably do one on Monday as well, even though it's a short day, just to keep everyone updated. And again, as I always say, and people in the chat room almost laugh at me, but I say I have to say it because sometimes people take things too literally. Always consult your financial advisor, and never take anything I say as the truth or anything like that. Always do your due diligence. Ignorant investors are the worst type of investors. You got to really look into things. I always do my research. I never listen to another analyst and say, he sounds good or she sounds good. I think I'm just going to believe whatever they say. And in all fairness, I'm not an analyst either. So, in any case, these videos are purely for entertainment purposes. But hey, we continue to do well here, and I hope some of you guys caught a little bit of this upside in this market. It always makes me happy when people do. Have a wonderful day, guys. We're off. We'll talk to you tomorrow, and have a wonderful evening, and we'll see you tomorrow. Bye.